Dear friends, welcome to the ICE learning platform. Nowadays, accounting has become an important profession. Growing number of business organizations opens more opportunities for accountants. Here, the ICE learning platform is trying to present the basics of accounting in a simple and systematic manner through a series of videos. We are sure that the students and others who wish to learn the basics of accounting will be benefited by these videos. Your suggestions will help us to improve the contents. Please don't forget to like, share and subscribe to the channel to get more videos on accounting. Our aim is to teach accounting in a systematic and simple manner covering all the aspects of the subject. So length of the videos may be little longer. However, it will be beneficial for all the learners. So let us get started right away. Introduction to accounting. For learning any subject, we must be thorough with the basic terms of that subject. Here also, we are going to learn the important terms used in accounting. You all know what is the use of a language. Yes, language is used for communication. You have heard about computer languages. They are used for communicating with the computers. All programs are given to the computer in its own language. So accounting is often referred as the language of business. You know that language is used for communication. So accounting is often referred as the language of business. So the first important thing to be noted is that accounting is also a language. A language of what? It is the language of business. That is the first and foremost important point to be noted before going to the basics of the account. You know that language is used for communication. Likewise, we already told that accounting is also a language. Accounting serves as the language of the business, and its purpose is communicating the results of the business operations. You know that business operations are carried out with the aim of getting profit. So, business organizations are carrying out a lot of transactions day to day. Such transactions are to be recorded in the books of accounts of the business, and the results of the transactions has to be communicated to the interested parties of the business. So in short, we can say that accounting is the language of business used for communicating the results of the business operations. Accounting is the language of business used for communicating the results of the business operations. Who are the parties interested in the operations of the business? First one comes, they may be called the stakeholders of the business. First one comes the owners. Owners are the people who are investing money into the business for the purpose of earning profit. The owners are the first group of persons who are interested in getting the results of the business organizations. Second one is the management. Management are the people who are entrusted with the task of managing the day-to-day operations of the business. In case of small business enterprises, owners and managers may be same. However, in case of the large business organizations, owners are different from the management. So, management is the second important group of people who are interested in the results of the business organizations. The third group of people or the third stakeholder who is interested in the operations of the business is the government. Government have to impose taxation. Government has to frame policies for development of business, etc. So the government are the third stakeholders who are interested in the operations of the business. The fourth one and the last one comes the customers. Customers are the people who are the beneficiaries of the business operations. They are also interested in knowing the results of the business operations. So the accounting serves as a language of the business for communicating the results of the business organizations to various stakeholders of business such as owners, management, government, customers, etc. So from this discussion, we can conclude that accounting is the language of the business used for communicating the results of the business organizations or business operations to stakeholders such as owners, management, government, customers, etc. The accounting is old as civilization. Modern accounting originated during the 14th and 15th centuries. An Italian mathematician called Luca Pacioli is known as the father of modern double entry accounting system. What is double entry accounting system? That we will discuss later. So Luca Pacioli, an Italian mathematician, is regarded as the father of modern accounting system. Modern accounting system is termed as double entry accounting system. Luca Pacioli published a book on double entry accounting system in the year 1494. That resulted in the beginning of the modern double entry accounting system. Traditionally or in olden days, accounting was confined to bookkeeping and preparation of financial records of the business organizations. Nowadays, the business environment has changed due to various reasons. Actually, the industrialization has changed the business environment rapidly, and in the present century also, due to the revolution of information technology, also rapid changes have happened in the business world. So rapidly changing business environment has changed the role of accounting and accountants within the organization and the society. In earlier times, the role of the accountant has only that of a bookkeeper and the person responsible for preparation of essential financial records of the business operations. Now, the role of the accountant has shifted from that of a mere record keeper of transactions to that of a member providing relevant information to the decision-making system. The success of any business organization in modern times is related to taking appropriate decisions at appropriate times. For taking appropriate decisions, the management of the business organizations have to get correct data for taking the decisions. These data are to be provided by the accountants. So, the role of the accountant has changed to an important person providing relevant information to the decision-making system. Accounting is basically classified into three streams. First one comes financial accounting, second one comes cost accounting, third one comes management accounting. These are the main branches of accounting. That branches of accounting that we will discuss later in other video. As we have told that financial accounting, cost accounting and management accounting are the branches of accounting. These are the traditional branches of accounting. Nowadays, the scope of accounting has changed to some other areas also. One of that is forensic accounting. That is related to solving crimes such as computer hacking and theft of large amounts of money on the internet. That is a new growth area for the accounting. Another one is e-commerce. Due to the introduction of information technology in the business, web-based payment system has developed. That is another growth area for the accounting. Financial planning and environmental accounting are the other new areas for accounting. The accounting has now raised it to the level of an information system. So nowadays, accounting has raised it to the level of an information system. Information system is very important for an organization for the success of that organization. As an information system, accounting collects data and communicates economic information about the organizations to a wide variety of users. As we have already told that accounting is the language of the business. That language is used for communicating the results of the business operations to various stakeholders such as owners, management, government, and customers. Now we are going to the definition of accounting. Some of the professional agencies have given apt and exact definition about accounting. The first And the foremost important definition for accounting was given by the American Institute of Certified Public Accountants, AICPA, in the year 1941. AICPA defined accounting as an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. According to AICPA, accounting is an art. Art of what? Art of recording. So the first element in the accounting comes the recording. Recording of what? Recording of the transactions which are taking place in a business. You know that in a business organization, a lot of transactions are taking place. Suppose we just imagine that there is a grocery store. In a grocery store, the owner has to purchase provision items for selling. There comes the purchase of provision items. That is a transaction in the business. When the provision items are purchased, the owner or manager of the business has to give money to the vendor. And in exchange, he will get the goods that is to be sold to the ultimate customer. So, a transaction is taking place in the business. Whenever a transaction is taking place in the business, that has to be recorded in the books of accounts. That is the first process. So, accounting is an art of recording. Second one comes classifying. As we told that business transaction, there are a lot of business transactions. The first one is purchase of goods. Second one is sale of goods to the customers. Third one is depositing of money into the bank account. Withdrawing of money from the bank account. Purchase of assets for use in the business. Purchase of machinery for use in the business. Selling of old machinery which is not presently using in the business. All these are transactions. So the first point comes in accounting is recording. Second one is classifying. What is classifying? The recorded data has to be classified according to the nature. Suppose I told that purchase is made, sales is effected, money deposited into the bank. These all are different types of transactions. All these transactions are to be recorded in the books of accounts. However, these transactions are to be classified according to certain criteria. Purchase is one set of transactions. Sales is another set of transactions. Depositing money into the bank account is another set of transactions. So the second point in accounting comes the classifying. The classified data has to be summarized. That all data is not needed. So that data is to be summarized in a significant manner. That is the important point. Accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money. The most important thing in accounting is only the transactions which involves money will be recorded in the books of accounts. That is the one important point to be noted. There may be a lot of transactions taking place in the business, but all these transactions should not be recorded in the books of accounts. Only those transactions which involves money or money value will be recorded in the books of accounts. For example, suppose ABC Limited is a business organization. They purchase goods, that means for selling. Suppose imagine that they are a stationery shop and they purchased books for rupees 10,000 for selling to the customers. So here books comes into the business and money goes out of the business. Here the transaction involves money. So this is a transaction that has economic value, or this may be termed as an economic event. Only so recording only the transactions which involves money or money's value. That means a lot of transactions are taking place in a business organization each day. However, all these transactions will not be recorded in the books of accounts. Only those transactions which can be expressed in monetary terms will be recorded in the books of accounts. For example, the efficiency of the staff of a business organization. It is a relevant thing for the business organization, but this should not be recorded in the books of accounts because the efficiency of the staff of organization cannot be quantified or which cannot be expressed in terms of money. So, in short, we should understand that only the transactions which can be recorded in terms of money or money's value will be recorded in the books of accounts. These recorded transactions has to be interpreted and the results has to be make use for decision making purposes. Another important definition for accounting was given by the American Accounting Association in the year 1961. According to the American Accounting Association, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of information. This is similar to the definition given by the American Institute of Certified Public Accountants or AICPA. But it is more simple than the AICPA definition. So the American Accounting Association says that the accounting is the process of identifying, measuring, and communicating economic information. So the accounting has to identify the transactions, has to measure the identified transactions, and these identified transactions has to be recorded and the economic results has to be communicated to the users of the information. So each of the process involves recording, classifying, summarizing, and communicating the results. Each of these aspects we will discuss in the practical sessions. We have discussed the definition for accounting given by professional agencies. Here we are providing a simple definition for accounting that you can understand more easily. Accounting is the process of identifying, measuring, recording, and communicating the required information relating to the economic events of an organization to the interested users of such information. That is a simple definition for accounting. Then we can see what are the relevant aspects of accounting. First one comes the economic events. What are economic events? The events which can be expressed in terms of money or money value are called economic events. Second one comes identification, measurement, recording, and communication. The transactions which are economic events has to be identified first. Then its money value should be measured, and after measuring of money value of that transaction, it has to be recorded in the books of accounts, and the recorded data has to be interpreted and communicated to the interested parties. That comes the second aspect of accounting. Third one is organization. What is organization? Organization means the business organization. That means the enterprise is termed as, or in simple terms we can say that the enterprise is termed as the organization. Interested users of information, that we have already discussed, owners, management, government, customers, etc. are the persons interested in the information provided by accounting. With this, the first video on basics of accounting is concluding. You may please offer comments below, and don't forget to like and subscribe to the channel to get all the videos on basics of accounting. The second part of the video related to the history and development of accounting. Thank you very much.